Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Carol Massar along with David Gore. Tim is out on assignment. We'll be back tomorrow. So, hey, we want to talk a little bit about the inflation report because, David, as you mentioned at the top, I mean, it really did feel like investors like what we got, that there wasn't any kind of big surprise here.
Yeah, just to give everyone an update on what we did learn, the core consumer price index, excluding that often volatile food and energy categories, increased by 0.3% from June, from the month before. That's according to the Bureau of Labor Statistics data that was released this morning. Largely in line with what economists were forecasting, Carol, and on an annual basis, it picked up to 3.1%.
It's one of those, whew, okay, yes. Not worse than could have been. All right, let's get more on the release, the outlook for U.S. inflation and really Fed policy. With us is Bloomberg TV and Radio international economics and policy correspondent, of course, our Michael McKee. He's here in studio. And also with us is Poojam Sriram. She's Vice President of U.S. Economics Research over at Barclays. She's joining us from New York City. Welcome to both of you. So, Mike, for those who maybe, I don't know, slept in on this Tuesday, what do we need to...
Not you, Mike.
It wasn't Mike. What do we need to know about the inflation print this morning?
Well, I think what you want to say is don't count your chickens before they're priced, because there is some evidence of tariff pass-through in these numbers. There's maybe some evidence that Chris Waller's right, that it's a one-time increase, because we saw things that went up in price last month because of tariffs come down. So it may be a one-off, but it may be a continuing one-off that pushes inflation higher, because you saw things like used cars go up 0.5%. New car prices, which had been declining, are now flat, which the president claimed as a victory. But then you look at the profit margins for the automakers in the second quarter, and they were all minuscule or negative because they're absorbing it. And they're not going to continue to do that. So there is no proof that the tariff issue is over in these numbers. And the other aspect of it is
we haven't figured out all the details with some of our big trading partners.
Services prices have gone up. Yeah. They went up more than anticipated. So that's something that doesn't have to do with tariffs, but is a concern to economists, and it'll obviously be something the Fed wants to watch.
Could you pick up on that, if you would? I was looking back at a recent note that you wrote before these numbers came out this morning, and you said that while firms intend to raise prices, they've been resorting to other mitigation measures first. What did these data this morning tell you about the way the economy has been reacting, is reacting to the president's trade policies?
Yeah, sure. Great question. The release this morning was, to us, a pretty mixed bag. What was interesting is a lot of the acceleration that we saw in core CPI came from the core services component. Core goods prices were up. Inflation was, on the core goods side, still at 0.2%, very similar to what we saw in June. But really, the increases in prices, they're not as broad-based as one would have expected. Now, to be clear, we think it's too soon for us to conclude that the tariff pass-through is not happening or is more muted. We do think there are a couple of things that could have happened in July, which just made the core goods side of the report look a little softer. One is, if you remember, July was a big promotion period. We did have an Amazon Prime Day event that lasted longer than usual. And we had similar promotions from retailers like Walmart and Target. So it's plausible that we just had, slightly lower looking prices this July than we did last July. And if you look at some of the details within categories, that seems to corroborate with this narrative. But I also will allude to what Mike McKee pointed out earlier. We are seeing signs of early tariff pass-through already in the economy. Within the CPI release itself, we've been flagging for a while that household furnishing prices, for example, are up 3% just year to date. This is very different from how prices historically have behaved. Something very similar can be said about appliances in the US. So I just think tariff effects are in train. And while today's report may not suggest that we are seeing much tariff effects. I just think it's too soon for us to dismiss that effect altogether.
Mike, let me ask you, if I could, about housing. We looked at these data for some indication of those costs as well, and we have for many months now. What is it telling you about the state of the housing market in the U.S. today?
Well, we're not seeing price declines, but certainly the price increases have leveled off. This is the third month in a row that owner's equivalent rent was up 0.3%. And on a year-over-year basis, we see slight declines here in home prices. We're seeing in the more immediate data, the Case-Shillers and things like that home prices are not rising as fast because at this point, people have given up on selling, it appears. And so they're not raising prices because it's a seller's market. But let's see what happens going forward. The interesting question is going to be, how does the housing market recover? Is a Fed rate cut or two going to be enough? How much does it have to go down before people get out there and start buying again?
One thing I wanted to ask both of you, and Mike, let me start with you first, is that I think I heard it on Surveillance this morning, the idea or the concept of it's not just the number and where it goes to, but the percentage of the increase or decrease. So when we think about that, I mean, I know the numbers came in line, but what we've seen in terms of trends in inflation, are we seeing it continue to kind of move down in a significant way, like that percentage change?
If you if you have a Bloomberg, go ahead and put in CPI YOY index GP and graph it. And in the last 2.5, 3 months, the inflation arrow has changed from going down and to the right to going up and to the right. It's not been a huge change yet, and we don't know for sure that that's going to happen or if it's just going to continue to steadily rise. But it definitely shows the inflation trajectory has changed.
All right, so let's cut to the chase. What does this mean for the Fed? Pooja, weigh in on this. I know Mike tends to say, and he's always right about this, that there's a lot more data coming our way before the next Fed meeting. So has this changed anything for Jay Powell and company?
Well, I think not. The Barclays baseline for a while now has been one rate cut and all the way at the end of the year in December. Now, we're looking quite out of consensus, admittedly, but we think, there is a lot of data to come. Nothing in this inflation print to us was suggestive of inflation being more muted or the tariff effects are not coming. So we do think that, the next employment report is going to be the big one to watch out for. Also, we're going to hear from Chair Powell at Jackson Hole. And so we think those would be good signals to watch for. But right now, we maintain our call. The Fed is in no rush to cut rates, and we have a call for December.
I believe Mike's getting his cowboy boots ready.
You mentioned Jackson Hole, and Mike lights up. You can't see it on the radio.
We're getting ready for
TV. You can. But Mike, how are you sort of thinking about the way this influences Fed decision making going forward? The report today, and of course, sort of what this might tell us about the PCE report coming up a little bit later.
Well, I think it puts them in the category of if we get the same numbers that we've gotten, and by that I mean inflation numbers and another round of bad jobs numbers, the Fed might be more inclined to cut. But when you parse who the voters are and what they've said since the last Fed meeting, you got about 2 people who think they should go down, 2 people who think they should not, and 2 people who are undecided. The rest have yet to weigh in. So we will hear more over the next couple of weeks, including from the chair, and we'll see where they are going into September. But again, there's another jobs report and another CPI report and a PCE inflation report. And so there's a lot of information to come that will help decide what's going to happen. The odds are now 96% that they cut in September, but I wouldn't put money into that market right now.
I feel like I've seen this movie before.
Yes.
Expectations that change very quickly on a data point. Michael McKee, thank you so much. Always appreciate it. And of course, Pooja Sriram, Vice President of U.S. Economics Research at Barclays. Hey, coming up later next week, do join us for our live coverage from Jackson Hole. We'll be on the ground in Wyoming. Well, we meaning Mike and team, covering the Kansas City Fed's annual economic policy symposium and highly anticipated remarks from Fed Chair Jay Powell. all happens and starts Wednesday, August 20th, and finishes up with a special edition of Bloomberg Surveillance. Tom Keene, Lisa Bromowitz, and the one and only Mike McKee will all be part of that special starting at 9 a.m. Eastern on Friday.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
David Gura in for Tim Stanovic, who's on assignment with Carol Masser here on Bloomberg Businessweek. And we got news yesterday from the White House that President Trump has decided to extend that 90-day pause yet again on those heightened tariffs on China. China very much in focus here in the U.S., of course, as we wait to see sort of what happens with those trade talks, but also playing an incredibly important role around the world. We saw the Brazilian president, Lula da Silva, speaking with the Chinese leader, exchanging their views on international affairs. President Xi calling for coordinated efforts against unilateralism and protectionism. News today also that India and China set to resume direct flight connections as soon as next month. And we're seeing oil playing a critical role here as the contours of this trade war continue to come into focus. It does feel like, in a way, many parts of the world are moving on and increasingly away from the U.S. Let's get to a roundtable now to understand China's goals here, what they're thinking in terms of the role they're playing in the world. U.S. very clear, of course, about wanting a higher tariff world for those looking to sell into the U.S. Shadad Kazi joins us, Chief Operating Officer, Managing Director of the China Beige Book, here with us in studio. And from our bureau in Buenos Aires, Jimena Zuniga with us, Geoeconomic Analyst for Latin America at Bloomberg Economics. And Shadad, let me start with you and maybe just give us your sense of how China is thinking about all this. We've had a series of 3 meetings now, Geneva, London, Stockholm. The pause continues here as we get perilously close, I think, to the Christmas holiday, when people are going to be buying a lot of gifts and are going to be very worried if a lot of these tariffs come to pass. How is China thinking about the kind of trajectory of these negotiations with the U.S.?
When the year began, we would have thought that their primary objective was to bring the tariff levels down and negotiate just about trade. But what we've learned is that they are much more concerned about U.S. export controls, because that is ultimately what hurts them far more than even tariffs do, because they have ways to get around the tariffs. And so what they've done is they've used their chokehold on rare earths minerals and magnets and compelled really the administration to relent and roll back U.S. export controls while also bringing down the tariffs. So 2 wins for Xi Jinping in the last several months.
But what kind of relationship do you think he wants with the United States going forward?
Well, he'd love nothing more than to be able to sell as much as possible and be able to import the things they care about most, the most advanced technology, not just chips, but across the board, right? That's in an ideal world. Now, that's probably not what he's getting right away, but he's getting pretty close to it. I don't think he feels a pressure to do anything more. I don't think he feels a pressure today to say, I'm going to pledge like Japan and Europe did, $500 billion worth of investment, or I'm going to pledge to buy all this U.S. agricultural output the way I did in the past. I think they've demonstrated, Xi specifically, we've got a lot of leverage and we don't need to play ball if we don't feel like it.
I do think it's interesting that they want all the high tech, and yet Beijing is urging local companies to avoid using NVIDIA's H20 processors, particularly for government-related purposes. So yes, but there's always caveats. Jimena, come on in on this, because in the meantime, Latin America is watching very closely, I'm sure, and remind us of the relationship that already exists with China across Latin America and maybe what they hope to even solidify even further.
Thank you, Carol. Yes, Xi and Lula just talked, and they said the relationship is as strong as ever. But so far, the support from China to Brazil seems to have been largely rhetorical, right? They have said, they have shared views on multilateralism and unilateralism on behalf of the U.S., condemning that, and China has been very keen on jumping on this collective criticism of the U.S. But even though Trump's tariffs may be giving BRICS, the bloc that Brazil and China have, along with India, Russia, and other smaller partners, even though Trump tariffs seem to be giving it some mortar, it's still far from operating as a bloc, and it's not really coordinating a response, a collective response to the Trump tariffs.
Jimena, on that note, do you anticipate that's likely to happen? I remember that moment a few months ago when there was the meeting of the BRICS countries. There was this tacit threat that they were going to work more closely together in opposition to what the United States was doing. President Trump clearly irritated, agitated by that, threatened even more punitive sanctions, more tariffs on those BRICS countries as a result of that. What would the catalyst be that would get them to do more than, as you say, just talk about presenting a more united front against the United States?
I think there are two main issues that are blocking a more integrated response, a more coordinated response. One is the very diverse membership of the group in general, and also with respect to the Trump tariffs. They are facing slightly different issues, although they are becoming increasingly closer in the sense that, for example, now Brazil and India are similarly targeted. But, for example, Russia has so far not been targeted with tariffs, although they have other issues with the U.S., of course. But the key thing is that China doesn't really need the bloc as much as the other members of the bloc need China or would benefit from a coordinated response with China. As Shashank just said, China has a lot of leverage, has demonstrated has a lot of leverage to push back without offering any dramatic concessions as other countries have done, and the U.S. has backed down. So China does not really need to have the collective weight and heft of the BRICS bloc to stand up to Trump. If it did, however, it could really expand its geopolitical clout, and it would mean the BRICS would function more as a bloc. But so far, I think China is very focused on its national interests, and as long as it can stand up to Trump on its own and it has the leverage to do it, it is unlikely to compromise its national interest to expand the BRICS heft.
We're talking with Jimena Zuniga, geoeconomic analyst for Latin America, out there in our Buenos Aires bureau, and also with us, Shahzad Kazi, Chief Operating Officer, Managing Director of the China Beige Book, in studio. All right, so let's shift a little bit to China and India, which I think is kind of interesting. And, just a little headline, as David mentioned, that it looks like India and China set to resume direct flight connections as soon as next month, according to those familiar, as they look to kind of reset their political ties, as the U.S. and India, after years and years of working on improving that relationship, seem to have taken some steps back. China and India, what's China's goal there?
Well, I think, they have an incredibly complex relationship because whereas they trade
it's not a friendly one.
It is absolutely not. They have very serious national security concerns about each other, more specifically India with regards to China. And of course, are constantly having these battles and skirmishes at the border. Long running problems there. So, I think the trade relationship.
So is any of this real? Or is it just for show?
I think it's real to the extent that they want to do business with each other, but it's not. It doesn't go towards anything beyond that. I mean, India. So let's be clear. India does not want to be seen as a country that's going to counterbalance China and all the rest on behalf of the U.S. It wants to be seen as a power in its own merit, on its own right. And by that token, though, still, they also don't want to blow up their business relationship with China. This is far more complex than I think traditional models of geopolitics would suggest.
We were talking about sort of the gap that might be left if the trading relationship is ruined between the United States and China. How confident is China that it could get, yes, the rare earths, the critical minerals exported to other countries if the U.S. isn't able to buy them? I guess what I'm saying is how sure are they in their ability to pivot to other markets if the U.S. is no longer what it has been?
So they demonstrated, I think, that everybody is desperate for Chinese rare earths. And if you remember, what they did was briefly, they set export controls on more or less everyone so that they could prevent us from transshipping those rare earths right into the U.S. the way, obviously China takes advantage of transshipment. So I don't know if that's really the big concern because there's such desperation given the chokehold that they have as the sole supplier, really, of most of these things, including some really critical things like samarium, which you need for weapons development, and how dependent we are on that. And by the way, they are not letting that out.
Jimena, I also wonder, if some great deal happens between the U.S. and China after, the delays are done, will Latin America as a whole or specific countries be like, okay, missed opportunity, we're out, because we understand the importance of that U.S.-China relationship, and especially if China gets better terms in terms of tariffs finally?
What do you mean? We are out? Sorry.
Well, meaning that they won't necessarily have such an open door, perhaps, or the conversation lines, between China and Latin America might go away if ultimately the U.S. trade deal and tariff deal that they come together with China is not as onerous as maybe has been put out before, that ultimately U.S. and China come to terms that are good for both sides. So does then China kind of back off again from Latin America?
Yeah, in a way, I think that China is very present in Latin America. If you think of it, outside Mexico, who exports 80% of its goods towards the U.S., China is the main market for most of the other biggest economies, including Brazil, Argentina, Chile, Peru. And so I don't think that Latin America can choose between the US and China. For Latin America, the best would be not to have to choose. And for a while, it cultivated positive, pragmatic relationships with both markets that are important, not only in terms of trade, but also in terms of financing and in terms of tourism. Both markets are critical to the region in different respects, depending on the country. If having to choose, a lot of countries would try to push back a lot, not to have to choose. They would continue to trade with China. They would continue to have financial ties, and they would try to push back on the U.S. because China is now almost as important or more important for many of these countries as the U.S. is.
Any last thoughts, just real quickly?
Well, look, China's going to be a big player, which is why I think when Secretary Rubio took over, his big focus initially was supposed to be to push back on China right here in the Western Hemisphere. That feels like years ago at this point.
It does.
But it's an important objective, I think.
All right. So appreciate both of you. Yes. Shahzad Qazi, Chief Operating Officer, Managing Director at China Beige Book, right here in studio. And then out there at our Buenos Aires Bureau for Bloomberg News, Jimena Zuniga, Geoeconomic Analyst for Latin America.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, he holds one of the most important jobs in the Trump administration, is often out and about talking about the president's policies. Another individual who hails from the world of financial markets before taking the job in Washington. We are talking about U.S. Treasury Secretary Scott Bessent, who is the subject of the latest issue of Bloomberg Businessweek. It's the cover story. It's on the Bloomberg 2 at Bloomberg.com/Businessweek and on newsstands. We're talking about Mr. Bessent, with two key members of our Bloomberg team about tariffs, deficits, and President Trump's economic plan. With us is Bloomberg News U.S. Treasury reporter Dan Flatley out there in our D.C. bureau, and Bloomberg New Economy reporter, editorial director, and Bloomberg Businessweek editor-at-large, Eric Schatzker. Eric here in our studio. Eric, I want to start with you. Deep dive, so much detail, pretty incredible. Your first impression of actually sitting down and talking with the Treasury Secretary?
Oh, boy. Well, I'd had the good fortune of seeing him a couple of times since he became the Treasury Secretary. I would say more than anything else, and I'm curious to know if Dan feels the same way, that he was remarkably at ease. This is someone, and that it truly is a point worth making, because this is somebody who came from a totally different background, who had no experience in Washington, who knew nothing about how to navigate political waters, and yet only 7 months into the job, he's sitting there at the Treasury Department feeling like, or at least exuding an aura of calm and control in a way that wasn't a foregone conclusion. If you had the background that he had, you ran a relatively small hedge fund, certainly not that many people. At the most, over the course of his career, he probably oversaw 300 people at Soros Fund Management when he was the chief investment officer, 2011 to 2015. Here he's got a department of 100,000 people. Yeah. And as we explain in this story, it is the department of everything. He is responsible not just for the things that Treasury is typically responsible for, but so many other things as well, including trade negotiations, acting IRS commissioner, shepherding the One Big Beautiful Bill through Congress. You name it, it's on his plate.
Dan, I'm curious if you want to respond to that, sort of how you found the Treasury Secretary, but also I'm interested in how he sees his role, yes, within the department, but in the administration as well. The president has a varied economic team, folks from different backgrounds. He's taking advice from all of them. What's the role of Treasury Secretary Scott Bessent in, yes, advising the president, but setting his economic agenda as well?
Yeah, it's a great question, and I agree with Eric. He definitely seemed at ease when we were speaking with him. And one of the things that I noticed, he goes on TV a lot, and he's very careful sometimes about what he says on TV. Occasionally, he gets himself into some trouble with some of his public remarks, including on TV. But he was much more at ease, much more relaxed. One of the things that I said to him was, you must feel very well prepared for your role in terms of macroeconomic policy and that aspect of it, given your background. But what about the political dimension? And he sort of gestured over to this table that he had set up in his office with a white tablecloth that he said he brought from home, where he brings in members of Congress to have lunch or breakfast with him. And he said that's one of the things that he's been trying to work on is congressional relations, and that's something that came into play with Steve Mnuchin when he was Treasury Secretary with the pandemic, where he really needed to rely on Democrats to get a lot of those sort of stimulus bills through. And Bessent hasn't had to do that yet because Republicans have control of both houses of Congress, and there hasn't been a crisis of that level, certainly, during his time in office. But he may need to rely on some Democrats at some point in the future. And so he mentioned that he has members of both parties there with him at times. So I think that was interesting. And then, how he sees his role, I think, he told us he gives the president options and outcomes, and he also helps manage the narrative, which is, I think, one of the things that's very interesting to observe how he does go out a lot more than some other secretaries in the past, and talks about what the president is trying to do. And I think markets seem to like that. Whether he can keep that up over the course of his tenure, we'll see. But that seems to be a big part of his role right now.
Well, it's something that you made reference to about how comfortable he was, because this is something that David and I both kind of seized on, like in reading your story about when he's on air. Eric, it is very halting, his speech. And you got none of that.
No.
When you guys sat with him. So it makes me wonder, is he just being so careful because he knows the president's watching?
Well, he's being careful, I would say, for a couple of reasons. Yes, maybe 3 reasons. Yes, he knows the president's watching. Yes, he doesn't have a lot of time in which to make those remarks. We give him plenty of airtime, and others do as well, but it's not as much time as Dan and I had. It's not as free-flowing a conversation.
Right.
It tends to be a conversation that's much more responsive to or concerning news and something that may have happened 10 minutes ago, or where the markets are trading right now. Dan and I had a relatively unique opportunity to talk to the to the Treasury Secretary without any of those pressures on his mind. And so he was able to express himself much more, in a sense, in his own words, the way he would express himself if he were having a conversation, I hesitate to say with a friend, but not under the glare of the television lights and a rat-a-tat-tat interview that you typically get when you're certainly being questioned by multiple parties.
You take us through his childhood in South Carolina, born of this family that's been there for a very long time. His
centuries.
Nicknamed by the Secret Service as Swamp Fox after Francis Marion, the American general. I'm curious, sort of, if you could you tell us a bit more about his background in finance? Because as you both mentioned, Wall Street seems to have warmed to him. They see him as kind of a bulwark against some of the president's worst impulses, perhaps. How did he make a name for himself on Wall Street? What's his specialty? Was it in currencies? Was it in macro bets?
Macro.
How was he known on Wall Street before this?
It's important, first of all, to say that it's in macro. He was a macro fund manager, which means he translates his view of global economics into bets on bonds, currencies, commodities, equities, whatever the case may be. A lot of it are relative value bets among different currencies, that kind of thing. That's what he specialized in. That's what he learned at the knee of both George Soros and Stan Druckenmiller. Stan Druckenmiller, for all of the fame George Soros has earned, Stan Druckenmiller, his chief investment officer at Quantum and at Soros Fund Management, may be the greatest investor in modern history. Is a man who, whether he was managing other people's money or managing his own money, has never had a down year. That, as much as anything, is what made Scott Bessent famous. He was the understudy to the mentee of Stan Druckenmiller. And of course, he ran 2 firms of his own, Bessent Capital first. He then went back to Soros Fund Management as the chief investment officer, overseeing George Soros's $25 billion portfolio. And then in late 2015, early 2016, he started Key Square Group, which is where he was until effectively, he became the Treasury nominee. It's a peculiar place to have come from in finance. It does prepare him in a unique way for the demands of the Treasury Secretary's job, because he thought about global markets and the interrelationship between policy and market response in a way that, say, a long-short equity fund manager never has to. And so that is an important thing to recognize about his background. It would have been, Stephen Mnuchin, for example, came from a very different tradition. He was a little bit more of an, he was specialized in operations when he was at Goldman Sachs, and then when he started his own investing operation, he was more of an opportunist, spent more of his time on credit. As you may remember, took over IndyMac, when that bank failed after the financial crisis.
Right.
Financed Hollywood films. A very different kind of a mindset. He had his own views, of course, about how to be the Treasury Secretary, but he didn't have the background and the immersion in global markets and world affairs that Bessent has had his entire career.
We're talking with Eric Schatzker, editorial director for Bloomberg New Economy, also editor-at-large for Bloomberg Businessweek here in studio, and Dan Flatley out there in our Washington, D.C. bureau. Dan is U.S. Treasury reporter for Bloomberg News. So it kind of begs, and you guys write this in the story, that he was a private guy. So I'm curious, Dan, does he like the job? Does he feel conflicted in terms of the president's policies, or that's not his job? It's just to maybe lay out scenarios for the president.
Yeah, no, it's a great question. I mean, on the privacy point, it's very interesting because he sort of mentioned to us this sort of old line about, a gentleman should only have his name in the paper 3 times: when he's born, when he gets married, and when he dies. And so
he's such a southern old gentleman. But go ahead.
Yeah, I mean, it's but it was very interesting because it was very apparent, I think, to us, and I think Eric would agree with me, that that's sort of how he lived his life up to the point where he decided, hey, I'm going to make a play for being Donald Trump's Treasury Secretary. And it didn't happen overnight. He told us that he got interested in the Trump campaign in 2016. He thought about potentially raising his hand for a position in the first Trump administration, but was conflicted because he had just started his own hedge fund, Key Square group, and he was very cautious about, wanting to be seen as overly political, although he did give $1 million to Trump's first inauguration, which he said he sort of smoothed over with the clients by saying it was the people's inauguration.
Right.
But over time, he got more and more interested in politics, and he sort of took us through his journey, so to speak, and some of the things that he saw that he was concerned about. Of course, he made mention of the Biden administration's policies, but he also talked about the idea that people don't trust either political party anymore, and that he sees himself as playing a role, smaller than the president's, of course, but still a significant role in terms of trying to shore up the system, so to speak. And again, like I said before, it's an active experiment. Whether it works at the end of the day is an open question.
All right. I wish we had another 20 minutes to go, but I highly recommend everybody check out the story. Eric, Dan, you guys rock. Eric Schatzker and Dan Flatley. So appreciate it. This is the cover of the new issue of Bloomberg Businessweek. You can find it too on the Bloomberg and at Bloomberg.com.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.